Today we're going to talk about the state of the financial markets and the problems that we're facing. And of course, we have to address several issues, especially the one with the US debt ceiling and also the problems that we have of returning to a phase of material and significant growth back from the low levels that we saw in the recent years. And this is going to take some time, as I'm going to highlight within the next slides. If we look at the first slide, we're seeing that the US 10-year notes, they're still trading around 3.5% yields, and this is not something that really convinces investors jump into the markets and to be faithful that they can earn some decent returns on their investments. And this is going to be a major issue going forward, in addition to the fact that if we look at the growth projection numbers, especially coming back to the United States, we're not seeing that clear sign of a massive recovery. We're still seeing that the growth projections we can be revised lower. These numbers are not indicating a massive return to growth. This is again coming back to the fact that we have headwinds and we have major problems, and the best example for this is the current problem with the US debt ceiling. The US debt ceiling is not something that anyone should really laugh about, because the consequences of a failure of reaching an agreement within the US Congress is going to be quite severe and long lasting. This is not a short-term issue. If we don't find a solution to the US debt ceiling crisis quickly, we will really have a troublesome period and a longer lasting troublesome period within the United States and also the global economy, because the US is the largest debtor, and if they cannot service the debt for whatever reason, this will have a material and severe impact on market sentiment. And also, coming back to the European numbers, they also indicate that they're not that overwhelmingly positive. On the contrary, the recent Germany industrial production numbers showed that we're not in a phase of recovery, we're retracting again, and the last numbers we have is minus 3.4% for the industrial production month on month, and Germany still faces the headwinds, not only on a global scale, but also, of course, especially driven by the fact that Russia and Ukraine are still in a military crisis, still at war, and they have a very major implications for the European markets. If we look at the overall picture, we're still seeing high inflation numbers, and these inflation numbers are simply not vanishing, and they are not going to be a short-term effect. They're going to remain in the market space for a longer period of time, and most investors have to pay attention to this, because otherwise they will face severe downdrafts. If you don't have the risk budgets, and if you don't have the patience to look at how markets develop, you don't have to be invested currently. It is better to wait on the sidelines and see whether you can figure out a way to have a better feeling and a better set of data that indicate what is going to happen next, or what is the most possible outcome of this. If we look at the crypto space, we have Bitcoin right now trading around 27,500, but still there is no really major market development that would drive levels of pricing much higher than where we are right now. We had a very decent recovery after the lows during the pandemic crisis, but still we're not close to the heights that we saw 2 years ago. So Bitcoin right now trading around 27,500 is a clear indication that there is a lack of enthusiasm for many investors to figure out whether they want to pour in more money or additional investments within the space. And this is something that some people really have to look more precisely, because otherwise you're going to get burnt. And for the time being, I would say there are major issues. This is a possible time of, you have to wait and see, and you have to figure out which strategy really fits the best to you. Being invested in risky assets right now doesn't seem to be the best solution. So maybe there is a better time to get into the markets, and maybe it is better to have some patience. Thank you.